Good morning, traders. Manny Cabrera here, founder of MDC Trading Academy, with today's pre-market forecast for midweek Wednesday, September the 8th. Just to remind you that tomorrow, Thursday, is the second Thursday of the month. Therefore, is contract rollover. So we'll be moving into our December contract. So keep that in mind for tomorrow's activity. Let's quickly jump to our news items for this week, as we of course we've had a short week. We have nothing on the docket we had nothing on the docket Monday through Tuesday, but today we do start with job openings, bond auctions, and an FOC member speaking. Now, Thursday, unemployment claims. Now, this is a biggie here, because it was disappointing job numbers on Friday. So this is going to be a big one here, unemployment claims, along with information regarding the coronavirus. And remember, also, we're talking about some inflation information. So these two items are going to be very important heading to the close of the week. So keep your eyes open for those reports. Remember, try to be out of the market when this news starts to be generated. Now, here's what our daily chart looks like. Another all-time high at 45.48, as we can see it here. Market retracing, very familiar pattern again, to the 20 SMA. Why? This is what it's been doing. I sound like a broken record, guys, but this is the idea behind following the market on a daily basis, understanding price action. You understand these patterns, you expect these patterns, you anticipate these patterns, and you have an advantage in the market when you know what to anticipate, particularly when you get the type of confirmation that you're getting continuously in these types of markets. You understand what the potential bottoms are, you understand what the potential tops are, you understand what the potential movement is going to be. It's very critical and really important. Now, obviously, our volume has been terrible. It's been way below a million, at least 1.1 million, which is our number that we're looking for. Our ATR is healthy, over 34, but still the ranges are really tight. So it makes for the types of markets that we've been seeing for the last several weeks. Just if you want to know how often I've said the same thing over and over again, just look at the bars, look how narrow they are, look at the type of movement we have it, and it's pretty much the same thing over and over again. Here's our drop to the 20 SMA, market continues, another drop to the 20 SMA, then we drop to the 50. Now here's the big test here. We're at the 20 SMA and our all-time high. All right, so that's the range that the market may move in. How long it's going to do it, we don't know. It's immaterial to us, but we do understand where we are in the market. Now, of course, we don't make decisions based on solely this particular chart. We start gleaning information from each of these charts that we present, and we start establishing a hypothesis. This is another time frame here. This is your all-time high. Look how the market has respected this previous all-time high. Look how the market just continues to dance around it. Look how it goes from using a support to resistance. Obviously, it went lower to this particular section here. And here's where we find ourselves. We find out a clear market that's trending lower. Anything below this trend line here, we're expecting the market continuation to the low side. Now, of course, a break above this, then we're going to find support here and potentially launch a little higher. So that's where we are right now at another time frame. So now we take the information from the daily, the information from this mid price chart, and we jump to our analysis chart, which is the one closer to our trading. Here's our new all-time high. Here's yesterday's intraday high, intraday low. Market clearly below the pre-market, but here again, here's our compression. We have this particular trend line here to the downside, and we have this one to the upside. There's your compression. What are we expecting? We're expecting the market to ultimately break either above this and run forward, which is similar to the expectation we saw at the 80 at the other time frame previous to this one, or the market break below this, hold support, hold resistance, potentially move lower, which obviously will lead us to, again, our short scenario where we could potentially go lower and try to hit the 20 SMA. So that's where the market looks. This is where the market is right now. This is the true range right now of the market. And once we get confirmation of either one of these positions, over these moves, that's when we're going to start pulling the trigger. But the caveat is here, remember, it's very low volume, very low ranges. What does that mean? It means it takes time for trades to develop. And once in the trade, it's going to take time for the trades to form. And then on top of that, it's going to take time for the trades to develop. So you require an extra dose of patience, discipline, and focus this morning. Have a great session. Let me know if you have any questions. Take care.